Assalamu alaikum, distinguished panelists and esteemed participants. I offer you a warm welcome to the 15th Federal Monthly Webinar. I'm Samir Sohani, your host for today's session. I'm currently working as a research associate in the Bangladesh Rating Agency Limited, a subsidiary of Dun & Bradstreet South Asia Middle East Limited. Thank you all for joining us for this enlightening discussion on impact of income tax on business environment of Bangladesh. Before we begin, let me take a moment to introduce our esteemed panel of speakers. We have the privilege to introduce a very eminent professional as the chief guest of this evening. Please welcome Mr. Anis A. Khan. Mr. Khan has had over 40 years of experience and training in banking and capital markets. He is a fellow and member of Council of Institution of Bankers Bangladesh and former chairman of Association of Bankers Bangladesh Limited. He is an adjunct professor at the Independent University Bangladesh and a guest faculty in Institute of Business Administration, University of Dhaka. He is also an advisor to the board of Tizer Risk Management Bangladesh Limited. And not only that, Mr. Khan also serves as a director of ACI Limited, ACI Motors Limited, Central Counterparty Bangladesh Limited, and W&W Gains Corporation. He is also an independent director of Trust Bank Limited, Ananta Apparels Limited, Summit Power Limited, and Summit Alliance Port Limited. Mr. Khan also serves as a chairman of Baylor Bangladesh and senior vice president of Bangladesh Cancer Aid Trust. So the time of our program is not long enough to describe all the achievements and all the success of Mr. Anis A. Khan. So thank you so much, sir, for coming to our event. So next, we're also very deeply honored to have a very diligent professional chartered accountant and a very active tax policy expert, Mr. Snehashish Borua, FCA ACA, as our keynote speaker. So Mr. Borua is a founding partner at Snehashish Mahmood & Co. He has the experience in providing audit, tax, and consulting service to MNCs, large manufacturing companies, banking, and financial institutions, including the Bangladesh Bank. Mr. Borua completed his articleship from Rahman and Rahman Hawk, a member of KPMG International Cooperative. He qualified as a chartered accountant from the Institute of Chartered Accountants of Bangladesh. Mr. Borua also qualified from Institute of Chartered Accountants of England and Wales. Not only that, Mr. Borua is a member of the faculty of ICAB. He provides training service to professionals from different sectors on financial reporting and corporate governance, including a Bangladesh Bank and National Board of Revenue staff. In addition, he's also a trainer at Dhaka Stock Exchange Training Academy. So we are very much privileged to have you with us, sir. And last but not the least, we have our Honorable Chief Executive Officer, Dr. Saeed Abdul Al Mamun, FCMA, as the moderator of this program. Apart from being the CEO of BDRAL, Dr. Mamun is the independent director and chairman of Audit and Finance Committee Board of Directors, Northwest Power Generation Company Limited. He is an independent director of FAS Finance and Investment Limited. So Dr. Mamun has earned his PhD in finance from School of Management, Asian Institute of Technology, Thailand. He completed his BBA in accounting and MBA majoring in strategic management accounting from Department of Accounting and Information System, University of Dhaka. Dr. Mamun is a certified professional cost and management accountant and a fellow member of Institute of Cost and Management Accountants of Bangladesh. And we're very, very honored to have such esteemed professionals with us today who will share their insights on impact of income tax on business environment of Bangladesh. So to dive into the discussion, I would like to request Dr. Saeed Abdul Al Mamun to take the floor. Over to you, sir.
Thank you. Thank you, Samira, for your nice introduction. Now, can I share the slide, please? Can I share the screen? I hope the screen can be visible.
Yes, it's visible, sir.
Okay. So, good evening, everyone. Welcome to all of you to the monthly BDRL webinar on income tax and its impact on the business environment. As this is our regular monthly initiatives to create a platform of disseminating insightful discussion to the participants as well as to the industry people, so that we can exchange the views and can be enriched and enlightened from the discussion. So in that line, recently the new budget has been launched and fiscal policy has been introduced. And you all know that fiscal policy has one of the important impact on the economy, that is to generate revenue. And income tax is one of the sources or options for generating the revenue through fiscal policy. And the effectiveness of fiscal policy is also very critical for the sustainable growth of the economy, taking care of the interest of all stakeholders of the economy. So in that case, we'd like to take the privilege to introduce our organization, that is the Bangladesh Rating Agency Limited, BDRL. It's a subsidiary of the Dun & Bradstreet South Asian Middle East. It's a global company, and it is incorporated in Bangladesh in 2008 and licensed from Bangladesh Securities Exchange Commission, as well as accredited as ICAI from Bangladesh Bank. And we exclusively provide the value-added services to the organizations and work as the growth partner of the organizations in Bangladesh by providing credit rating, advisory, research, and the training services. And we are very delighted to have our very reputed financial institution as our shareholders. And our parent company is a Dun & Bradstreet. It's a almost 200 years global company. We are working across the world with the more than 200 offices, and almost 90% of the Fortune 500 company are our client. And the legacy of the company is very glorious, in fact. And 4 ex-president of the USA were the employee of the Dun & Bradstreet. And Dun & Bradstreet South Asia Middle East Limited looks after the 60 markets of operation in the South Asia, Middle East, and Africa, with its 7 product line within a risk management solution, rating agency, credit bureau solution, sales and marketing, economic analysis group, research and advisory services, and financial and technology, fintech solutions. So the key engagement, as I already mentioned, that with the BDRL, it exclusively focus on the credit rating, advisory services comprising management advisory services, ESG advisory, rating advisory, due diligence, economic and industry analysis, and also training on the different financial statement and the risk management related issues. And we provide the credit rating services for different types of organization, including a corporate entity, bank, insurance, bond rating, insurance company, and NGO, MFI, project rating, bank loan rating, and personal rating as well. And also we provide the SME rating. And the uniquenesses of the BDRL rating is that we always try to provide the independent opinion, stay away from any kind of biasness. And rating analysis is done by an internationally trained analyst. And we try to always find the insights about the entity so that it treats as the input for the business strategy formulation and business decision making. So that that's why we talk that like then we want to find the better insights so that business get the input for making their better decision, which will lead their better business. And our other services, as we mentioned, that advisory, research, and the training. So this through these services, we would like to partnering with our clients and to support them for their growth and sustaining their growth. And we have already created the value-added services, almost 50,000 companies, including 40,000 SME rating, more than 350 corporate rating. And we have also given other services, around 80,000 companies we have given the services and helping them to grow in a sustainable way. And the uniqueness of the BDRL is a global company. So we can take the advantages of the experience and the resources of the global company like Dun & Bradstreet and highly qualified human resources. We treat that the human resources are the key, particularly with their professional skill, professional norms, as well as their continuous learning tendency and the knowledge support we ensure from the organization so that they can ensure appropriate services to our clients. And our methodology is very robust and we try to minimize the error to standard error to provide the credit rating services so that underrating and overrating can be at the minimum and the tolerable level and insignificant level. We try to provide continuous economic and the business resources, and we have also the countrywide business network so that our client get all kind of supported for their services. And overall philosophy of the BDRL that we want to find the truth from the data through our analysis. And as I mentioned that we want to find the better insights so that business get the input for their decision making and they can sustain their business in a better way. And overall, our objective is to ensure the credible credit rating so that companies get the sustainable growth and sustainable growth of the economy can be also promoted. And today's monthly webinar has an special implications for two reasons. One is the topic itself, and second one is that we are very lucky to have the two eminent professionals and who are very impactful as well. Mr. Anise Khan, and we are very grateful. Sir works like the mentor for us and for all industries, and he has a very impactful illustrated career, as well as he has already demonstrated that how a professional should be like with his professional impact. So sir, we are very proud of you, as well as glad that you are present here today. And Snehashish Borua FCA has already demonstrated his professional commitment to not only to a particular line of knowledge, but also his contribution in the policy formulation, especially in the fiscal policy formulation, and his commitment to give all kind of support for the fiscal policy effectiveness, which is one of the timely need for the Bangladesh. In the context when the debt tolerance is very high, but the debt affordability, in terms of debt affordability, Bangladesh has a lot of areas for improvement with the very low debt GDP, like tax GDP ratio. So in that context, the professional like Snehashish Borua is really playing a fantastic role, and we feel grateful to the Snehashish Borua for managing time and enrich of today's program. So with these few words, I would like to again welcome all of you, and this is the time to listen from our keynote speaker, Snehashish Borua. Please, Dada, you can share your slide and you can start your speech.
Can you hear me?
Yeah, we can hear you.
Thank you very much, Mamoon, for such a nice introduction. And thank you very much to BDRL for inviting me here for this presentation. And I'm so grateful to see people like Mr. Khan joining us as a chief guest, which is indeed a much pleasure for a professional accountant like me. So you have already underscored the importance of this year budget, which has just recently been, I should say, placed in the parliament, as well as the new income tax law, which was also placed back on 8th of June. So, and I also would like to welcome all the people who joined us today for this discussion. So without wasting much of your time, if I can take you through my presentation. I know this presentation is a bit thick document of 82 page. So I don't think I can run all these 82 pages within this shortest possible time, but I'll try to take you through all the major changes that might impact the business. So first of all, if you see, today's presentation is absolutely based on implication from business point of view. So perhaps you have seen in the budget the two impact of it, like from corporate or personal point of view. We also are very concerned about changes in the personal tax rate, since Mamoon suggested me to highlight from business point of view. That's why I'll not be discussing on the changes that might impact an individual. So what I try to do is, like, while preparing these slides, I tried to look into the gadget which was published after the enactment of the new act, and also the finance bill. So I tried to be as accurate as possible for the sake of this presentation, but if there are any corrections, then please refer to the original gadget. So if you see, this year budget is, I should say, it's not like technically you will not see a lot of changes happen as compared to earlier year. But if you look into the size of the budget for this year, this has increased by 15.33% as compared to last year, revised budget. So it is 7,61,000 crore, and it was 660,000 crore, for last year. And out of this total amount of budget, so estimated revenue earnings is approximately 500,000 crore, which has also seen a sharp increase of 16% growth from last year. So NBR has been made responsible for collecting majority of the earnings. So out of 5 lakh, NBR will have to collect 4,30,000 crore. And all these things, actually, we always make a deficit budget, which is usually 5 to 6%. So even if we can collect like 500,000 out of the total collections that we are projecting, still this will leave us a deficit of 2,61,000 crore. And the GDP growth for this country was very good in last, I should say, 10 to 12 years. And the projection for this year is also estimated to be 7.5%, which was 6.03% as per the revised budget. So here you can see a sharp increase of 24%. And also, if you look into the inflation part of it, the objective is to keep it within 6%. Perhaps like last Sunday, you have seen the central bank has declared monetary policy statement, where you'll see there are a lot of initiatives have been taken to control this unabated inflation. So it is expected to remain like 6%. And we are hopeful if they can keep it within this limit. And then if you compare the budget size into this in a component wise, so if you see, if we compare with the revised budget, then you'll see almost there has not been any significant changes in terms of revenue collection. It was 4,33,000 in the original budget. Still, it is in the revised budget, it is 433,000. But there is a sharp increase in terms of, like, if you see the operating expenditure part of it. So initially, total expenditure was estimated around 678,000 crore. So now in this revised budget, it has been increased to 660,000 crore. So technically, we have seen a sharp increase in terms of operating expenditure. Instead of reducing that, like, it has been proposed to increase from 373,000 to 390. So this shows the government recurring expenditure is increasing like anything, although we are not, observing any significant changes in terms of revenue collections. So out of 660,000 crore, ADP expenditure is approximately 227,000. But if you look into the actual spending up to March 2023, it is only 57,500. So technically, although we are making a deficit budget, we are not spending that much on capital part of it. So the deficit will not be what they're actually projecting. And if you look into the mix of revenue, then you will see there has not been any significant shift from collection point of view. The only thing is, like, if you look from the domestic source, they had been expecting 22% they will mobilize from the local source, and this has been targeted to be 20%. So NBR has been given 2% more responsibility as compared to last year. So NBR will have to collect more taxes as compared to last year, which will reduce the reliance on the local domestic sources. The rest of the component, external, non-tax or non-NBR taxes, in terms of percentage, I have not seen any significant change in terms of their contribution. And if you look into the overall collection, then you will see during the COVID period, we have seen a sharp decline. It was not increasing, rather it has decreased from 218,000 crore to 215. And we were very hopeful last year even, especially 2021-22, that it was supposed to be increased to approximately 3 lakh crore, but it was up to 292,000 crore. So now, as of March, like, the collection was 63%. So far, I have collected the information from different newspaper. So already up to May 2023, the total collection was approximately 290,000 crore. And it is estimated that, we'll be collecting additional 40 or 50,000 crore in June. If we can collect, then our total collection will definitely cross 3 lakh, but it will not be like 3,70,000 that we are expecting. So it will be roughly around 3,30,000. So which means technically, despite all these economic challenges that we can see with the dollar crisis, we cannot import capital goods or raw material. And with power outages, the factory cannot produce more. With all these challenges, still from 2,92,000 to 3,25,000 or 30,000 crore collection is remarkable growth. Where everything is declining, then the revenue collection is increasing. So now, nevertheless, if you compare 3,20,000 crore with 4,30,000, the estimated growth would be around like 35%. So which seems very, very challenging. But as always, we give like kind of increased number or an increased collection target because our ambition is really high to achieve. And then in terms of internal sources, whatever we had been targeting from last year to current year. So if you look into the revenue mix, income tax receipt is like 33% for last year, 38% for VAT, and remaining like 29% is from import duty and supplementary duty. So here you can see a paradigm shift from last year to this year. This year, with the introduction of new law and all these new methodologies, then you will see the total contribution from income tax is estimated to increase from 33 to 36%, which technically shows as a country, we are reducing our reliance from indirect taxes to direct tax. If you look into the indirect tax, it was 29% last year, but this year, the target is to collect 26%. So we are going to have 3% lesser collection from import duty and supplementary duty. And this is perhaps is aligned with our LDC graduation status. So because by 2026, we'll have to reduce the collections from import duty and supplementary duty. We cannot impose this tariff. And in that line, you will see in the budget speech, the government has reduced duties for 234 products and regulatory duty for around 190 products. So technically, you will see a paradigm shift going forward that our collection from income taxes or direct taxes will increase, and we'll have to reduce dependency on the indirect tax. But we cannot ignore the fact that still VAT is contributing the much higher amount, because collection from VAT is estimated to be around 38%, which was quite similar to last year. And this is the highest, I should say, revenue generating part for the government. And then, as we have said, like definitely we have to talk about the challenges part of it, but we'll have to look into the opportunities initially. So with this draft income tax, it has, I should say, like allowed the businesses to have some opportunities in terms of the long cherished demand from the business community, and it has also invited some challenges if you look into it. So what I have seen, if we look into the total presentation, I have segregated into 9 or 10 different parts. So let me take you through what are the changes which would be like investments and business friendly from my point of view. So perhaps if you see, these are the 4 tags that you can see that the withholding tax return has been reduced from 29 to 12. And also a comprehensive list of business expenses have been given with new structure. And in some cases, the expenditure limit has been widened. And also, as an accountant, we end up with all these differences. So between IFRS and the tax, so these differences have been reconciled. To take you through, at this point in time, a limited company is required to file 29 withholding tax related return in a year. So now, if we are going to have this new law in place, which has already been approved by the Parliament on 18th, so the number of withholding tax return will be reduced from 29 to 12 from July 2023. And also, if you look into the earlier Act of 1984, you will see the expenditure list was not structured. It just says a list of expenses, but there was no categorizations. So now in this new law, you will find there is a deduction list for general expenses. There is a deduction list for specific deductions, for bad debts, and also for the financing expenses. So this allows you to report your expenses in your IFRS and also to claim the deductions from tax point of view. And also, there are a lot of expenses which were not addressed in earlier section 29, which has been addressed in the new tax law, especially expenses like utility, transportation, discount and commission, advertisement, and most debated, WPPF, Workers' Profit Participation Fund. So when these sort of categorizations are there, then the assessing officer will not be in a position to disallow the business expenses. So this will be aligned with the audited financial statement that an assessee submits. And also, if you look into the earlier provision in, I should say, section 30 of the earlier act and section 55 of the new act, so all those royalty technical fee related expenses were admissible up to 8% in after 10 years of your commercial operation and 10% for initial 3 years. So now any entity, be it first year or 4th year, they can claim 10% deductions on a straightforward basis. So this will allow 2% more deduction for those businesses. And there was a cap on foreign traveling expenses. In the past, an assessee could have claimed 0.5% of the turnover as foreign travel expenses. Now, on top of that 0.5%, if it is a bona fide business expenses, then you can claim all these expenses as a commercial expenses. So this will allow you to deduct more as a business expenditure. And then fine, advertisement has been declared as not part of the promotional expenses. And also, if you are going to acquire a motor car, then there was a threshold of 25 lakh taka that you can claim as eligible deductions, for depreciation purpose. So now this threshold has been increased from 25 lakhs to 3 lakhs. So this will allow you to claim more deductions of 5 lakh taka. And then there are changes in Bangladeshi made software and research and development expenditure. And also, in many cases, while you had been doing these assessments, then the assessing officer, in some cases, they disallow the expenses, considering those as a capital expenditure, and they do not allow you to deduct anything. So now, if an assessing officer deducts any expenses as a capital expenditure, they will have to allow you, the amortization at the rate of 10%. So it means previously it was kind of a sunk cost. You could have never claimed this as an allowable expenditure. Now a business will be entitled to claim this expenditure. And also, most importantly, if you look into the 3rd schedule of the current act, that has given a clear list of difference between or distinction between depreciation and amortization. Amortization was not there in our tax law. Now you'll see amortization is there, specifically mentioned in the 3rd schedule of the new law. And I know as an accountant, it is very fundamental that we'll have to prepare the financial statement following IFRS. I have come across like many assessments in my professional career where I have seen the assessing officer has imposed income on unrealized gain of revaluation of property. Because if we follow IAS 16, we report this as other comprehensive income. So they consider this as an income since we have disclosed this as other comprehensive income, although the property has not been transferred. So now, since a clear provision has been mentioned, so until and unless the asset is sold, an income cannot be computed by the assessing officer. And now we are having a lot of debates on this foreign exchange gain loss. If we follow IAS 21, we need to account for realized or unrealized expenses in our profit and loss account. So what happens during the assessment, the assessing officer disallows whatever expenditure that you show, be it realized or unrealized. And if you report a gain, they estimate the gain to some extent. But now with the introduction of this new provision, the assessing officer will not be allowed to have all those, disallowances, because the law has been very explicit. And also, if you follow IFRS 16, you need to, capitalize right of use asset related, debits with corresponding credit to the liability, and you charge depreciation and interest expenses in your P&L, but you need to claim the rental payment as an allowable deduction. So there are a lot of disputes, happening in the tax assessment. So now those disputes will be resolved because clear-cut provision has been introduced in our new tax law. And also, if you see in our tax law, the separate chapter has been dedicated for automation and digitization of the process. Now, to some extent, we can generate ETIN from NBR, and we can also file some personal tax for return filing purpose, but not for the corporate. We cannot do e-assessment, we cannot do e-appeal, we cannot do e-tribunal. So all those legal provisions has been incorporated in the law. So now the government will have to come forward with specific, interactive and also integrated software so that, this whole process is digitized and nation can reap the benefit of this digitization. So only enacting the law will not be sufficient to avail these sort of benefits. And also, if you look into the legal provisions of this law, then you will see that in many cases we complain that the assessing officer makes arbitrary assessment, they do wrong audit file selections, and their procedure is not transparent. So if you look into the assessment related chapter, you will find that in this new law, a detailed SOP has been given for assessment, starting from selection of audit to appointment of inquiry team, and by when they'll have to wrap up the inquiry, and also who will be doing the audit, what is the time period for the audit, and how the audit team leader, who is the curator of the audit, will have to submit the report to the commissioner, and by when the commissioner will have to dispose it of. So a very clear SOP with timeline has been incorporated in the law, which will make this law, I should say, at least time bound and also transparent to the SSA. And not only that, this new law has also brought some international best practices, which was not available in our tax law. To start with, share-based payment is one of them. In many occasions, as a student of accounting, we also teach to some extent IFRS 2. So many employers issue these share options, but unfortunately, option-related income tax implication was not there in our tax law. So now, if a company is issuing any options to the employees, so in that case, that employee will have to pay taxes on the difference between the fair value of the shares and the cost of acquiring this share. So that will be considered as a salary income. So this gives an opportunity of the employee that they can show this in their tax return. Nevertheless, since you will have to determine the fair value of the share at the exercise date, so how you are going to determine the fair value is a big question mark. So we believe if the government is going to introduce a rule, then practical application of this provision would be a lot easier. And also, you will see earnings stripping related rule, we call it thin capitalization rule, has been introduced in the law. So now, if a company is borrowing funds, then interest on that funds would be admissible up to 15 lakh taka without any question. So, and then for remaining portion, the National Board of Revenue will develop a kind of a rule, and based on that rule you can claim as allowable deductions. So since the rule has not been introduced yet, we cannot see the implications. But what we can see, if the rule is not going to be introduced, then the tax charge for the company is going to be increased for those companies who are thinly capitalized. And also, we know there are a lot of tax planning opportunities. Some people try to avoid taxes by taking illegal means. So there was no provision in our tax law with regard to general anti-avoidance. So this is a new provision in our law. So if you have not shown the income properly, or if you have claimed excess tax refund, or if you have taken excess tax rebate, or in any other means, if you have reduced your tax liability by taking unfair means, and if it is anticipated by the commissioner, then they can increase the income to that extent. So again, so when we can see these sort of provisions that are there, then this increases arbitrary power to some extent. And also, you have seen in 2022 Finance Act, we introduced merger related provisions. Now with this new act, demerger related provisions have been introduced. So now if a company have got two different units for their operational purposes, so if they would like to spin off one of their unit, so they can claim exemption for this demerger. So the new company will not have to pay any taxes, and also the new company will be able to absorb the accumulated loss of the existing company on proportionate basis, and also they can claim depreciation which was unabsorbed in the original company. So all these things will streamline the process and make us at least graduate us to that international levels. And also, if you look into the law, then you will see for the first time the concept of fiscally transparent entity has been introduced in our tax law. So here, if you look into the alternative investment fund, mutual fund, REIT, real estate investment trust, exchange traded fund, so these are all specific purpose entity or SUV. So all these specific purpose entity, their income have been made exempt. So we believe with this exemption, this related industry will grow and will create alternative source of financing for the market. And if you look into the legal part of it, then you will see the law has allowed many simplicity and transparency in the process. To see that, you will see whenever you will read, you will see law has been drafted in pure Bangla, and the languages is very, very simple. It has not been complicated to that extent. And then if you skim read all those law, then you will see that there are no excessive proviso. In the earlier law, when you will read a law or section, then you will see there is a proviso, there is a sub proviso, there is a further proviso in addition to that. So when you read all these things, then you will see, like after reading the fourth paragraph, you will lose the momentum. You will not understand what this legal implication means. So in this new law, this kind of excessive proviso has been withdrawn. So to make the life easier, as you can see, in earlier law, it was 187 sections. Now it has got like 344 plus sections. So it means all those provisions has been simplified. And then when we, in this new law, when you get to see that if you'd like to determine income from business, if you go to chapter 5, then you will see which are the income which constitutes income from business and what are the allowable deductions. But if you look into our earlier law, it was very difficult for you to trace what constitutes income from business, because you'll have to travel to section 28 to section 19, many different sections. So now you don't need to travel to all these sections, rather you travel only respective chapter to determine that respective source of income and allowable deductions therefrom. And then perhaps you have seen in this new law, this is a blend of legal provisions and rules as well. So in many occasions, you'll see they have used simple formula. Say, for example, for income from salary, 2/3 of your income from salary or 4,50,000, whichever is lower, will be considered as an allowable expenses. So in this case, you don't need to end up doing all this calculation as to how much you will get as house rent deductions, medical deductions, or conveyance deductions. So far, I've heard that this 2/3 has been reduced to 1/3. And also, this formula makes your calculation a lot easier. And the law has all, you'll also see in each and every chapter, they have devised like definition, what it relates to in the respective chapter. So you don't need to travel to definition section to understand what it really means. And perhaps you will see that in the law, the file in terms of filing tax return, universal self-assessment has been made mandatory for all types of SSC, except for some company and OPC. So if it is a company or OPC, you can file a normal tax return, but all individuals or other entity, including bank, insurance, or financial institutions, will have to file return under 82BB. So it means there will be very limited tax assessments happening going forward. And then for transparency purpose, like firms, association of person, and fund, they have been brought within the definition of like filing audited financial statements. So all these firms or person, if their turnover is having 2 crore or above, they'll have to file audited financial statement. So far, I've heard from the newspaper that this ceiling of 2 crore has been increased to 3 crore. I don't have the gadget as of now, so that's why, based on the latest information, it is 2 crore. And also previously, there was no provision for ET deregistration. So if a person dies or if a person leaves Bangladesh, many foreigners are here who are leaving Bangladesh every year after expiry of their work permit. Many companies are winding up, many branch office or liaison office are being closed. So, but all these ETIN could not be deregistered because the provision was not there. So now the ETIN can be deregistered following the process. And also, in many occasions, we end up paying taxes for the suppliers and service provider. We call it grossing up. So this sort of grossing up provision was not there in the earlier law. So now the law is recognizing that grossing up is also possible. And also, tax avoidance related new provision has been introduced. It's like in most of the cases you will find, especially those companies who are having tax exempt income or tax holiday income. So in order to reduce the taxable income of the taxable unit, so they do end up doing transactions with the tax holiday unit. So now, if a non-tax holiday unit enters into a transactions with a tax exempt entity, so if that transaction is not at arm's length, the assessing officer has got the right to determine the difference as income from other source for that non-exempt entity. So again, the critical question is like, if you are going to determine the fair value, which is not very simple and easy task. So unless a rule is introduced, the assessing officer's arbitrary power might increase. I'm not talking about depreciation. And if you look into the law, then you'll see the refund process has been made easier. Now, if you end up paying excess taxes after the DCT has processed the return, so the law says like there is a specific timeline by when the DCT will have to process the return, then the entire refund amount will be credited to your bank account by where you are reporting in your tax return within 60 days. And also there are some changes with regard to withholding tax. You'll have to get registration as a withholding tax number. And also the most important part is like if you are taking intercompany loan, then if this intercompany loan is between two entities, if the lending entity is going to pay interest, then the borrower, when they are paying this interest to the lending entity, they'll have to deduct 10% tax at source, which means it was not under this TDS jurisdiction. Now you'll have to deduct taxes. So I should say like maybe they are paying taxes, but the cash flow will be impacted. And there are changes with regard to WPPF and surveyors related TDS, which is expected to increase from 5 to 10% and 10 to 15%. And this T-bill, T-bond related, I should say like there are many funds who are buying this treasury bill bond. And now the central bank will have to deduct taxes while crediting interest to this account. So technically it means with this deduction, the income of these funds will be reduced. So now with all these good things, every opportunities like comes with a challenge. So there are some challenging areas as well. which are going to adversely impact these businesses. So now, if we look into these legal provisions, then you will see, as far as the current law is concerned, a business can set off its other income with the business loss if they have got some business loss in this year. But this new provision or new law will not allow a business to set off other income with the business loss. Effectively, what happens, an entity will have to pay taxes even after sustaining business loss. So if you look into the international best practice, then you'll see there is a first test, we call it same business test. If the loss is happening within the same business, you should be allowed to have this set it off. And there is a continuity of business test. If the shareholders is not going to be changed, then if you have got different sources of income, the law should allow you to set it off. So technically, the legal provision is not in line with the international best practice even. And then the new law, you will see that incentive bonus has been included in the definition of perquisite. So perhaps last year the limit of perquisite was increased from 5,50,000 to 10 lakh. So now they are adding one component more. So which means if that perquisite limit exceeds 10 lakh, you'll have to pay taxes on the increased amount. So since incentive bonus will be added as like perquisite element, definitely it will increase the total limit. So in that case, the company will have to pay taxes on the excess amount. But the good part is, like in earlier section 30, there was a concept called 30J. The incentive bonus in excess of 10% of profit was considered as an inadmissible expenses. But in this new law, section 55 has eliminated that provision. So which actually creates the balance. And the most impacting factor that you can see is carbonated beverage. So the concept of minimum tax is there. So now for all this carbonated beverage, they'll have to pay 5% tax on their sales, which was 0.6% in earlier provisions. So which means this is effectively 830% increase in terms of minimum taxes. So in order to absorb this kind of minimum taxes, this sort of beverage company will have to earn at least 17 to 18% net profit on the top line, which is technically very, very impossible given the current scenario. Technically, what I have seen, this sort of industry earns like 2 to 3% margin. So which means in order to pay these huge taxes, either they'll have to borrow funds from their shareholder or they'll have to take loan to fund their income tax expenses. And if they cannot do it, they'll have to increase the price to a great extent. If the price increases, then the government is definitely going to lose their revenue because the production will be lower. Whatever VAT and supplementary duty government gets, so those amount will be reduced. And this sort of thing will give a bad message to the FDI because all these industries are dominated by foreign direct investments. And perhaps you have seen in the after the finance bill was enacted, an SRO was issued, and with that SRO, 8 SRO was repealed. One of them was SRO related to 1976. If an industrial undertaking is borrowing fund from outside Bangladesh, that borrowing was not subject to tax deduction, because that interest income was not subject to tax deduction. So now, since the SRO has been repealed, so if you are going to pay interest to these lenders, then you'll have to deduct tax in Bangladesh. So what will happen in reality? All these lenders, they will say, look, you'll have to give me X amount of interest. That's a net basis. So technically, the Bangladeshi businesses will have to gross it up. So if you do not have a double tax treaty with that company, with that country, then your interest expenses will go up by at least 25%. If you have got DTA, then your interest expense will go up by at least 11%. So perhaps in the monetary policy you have seen, now the borrowing cost will be increased by at least 3 to 4%. So this is an extra hit for the businesses who has obtained like foreign loan. And also in the finance bill you have seen surcharge will be applicable on the SSC, and that has not distinguished whether this will be applicable for individual or company. So if I look into the general meaning of SSC, it includes all types of SSC. So technically, if a company have got like 101 car, and if the CC of the car exceeds 1,500 CC, then that company will have to pay additional tax of 5 million for owning that 100 additional car. So technically, this will increase effective tax rate of the company. And also, I have not seen any adjustment related provisions in the tax deduction chapter. So previously there was some proviso and calculation, which technically gives you some credit for the tax that you have earlier paid. So I have given an example of a business who was selling the goods to the distributor, and the distributor is selling to the another business. So with this current provision, when a distributor is selling goods to the institution, they are now collecting, like, the total tax burden was 0.33. So if a proviso is not incorporated in the respective TDS section, the cost will go up to 6.89. So it is kind of exponential growth of TDS. So we are hopeful when NBR will come up with the rule, they will introduce these provisions in the rule. And then more, I should say, burdening part that you will see right now, a company is required to deduct taxes and deposit to the government exchequer, so which we call it TDS or withholding taxes. We are discharging all this responsibility for the government. And now what is happening after deductions, we are after depositing, then we need to file monthly return, which we are also working for the government. And then we are also required to collect proof of submission of return from them. So now what the government is proposing, if you do not collect PSR from 8 categories of suppliers and service providers, your entire expenses will be disallowed. So be careful. If you do not collect all those PSR, if your entire expenses will be disallowed, then you cannot claim anything as a business expenses. If your revenue is 100, and if the 100 will be considered as an income from business, you will not be allowed to, deduct the business expenses. So this becomes really, really extra burden to the SEC. And then one of the paradigm shift that you will see in earlier cases, this sort of tax deduction was considered as a minimum tax, final tax. Now new law is saying, no, this is not final, this is minimum tax. I just tried to take an example of a company, or I should say for a company point of view. So now if a company was, even if you are selling a capital assets of like a land in an area, I should say, like if you are paying taxes, like if your purchase price was 1 million and if your selling price was 80 million, you end up making a capital gain of 79 million. So if you look into the earlier law, then 4% tax, what was collected, was considered as a final tax. So now the law is saying the transaction tax has been increased from 4% to 10%, and also in area basis they have also set certain fixed price. So with this 10% on 80 million, you'll have to pay 8 million as taxes. So that is not the end of the story. Now when you will show the computation, your gain is 79 million, they will calculate 15% gain tax on that. And then if that amount is higher than whatever TDS you have paid, you'll have to pay the additional tax. So technically this is an increase of around 265% in terms of tax burden. And what we expected that new law would be applicable on prospective basis, not a retrospective applications of the law, because see, you'll have to allow people time to digest all this thing. And if you make all this provision on a prospective basis, the stakeholders will be able to digest everything, get themselves ready for the new law. But the crude part is the law will be applicable from retrospective basis. So many companies will be ending up with payment of excessive taxes. And then this law was there in Bangladesh soil for more than 101 years, and it was absolutely in English. So all the regulators, all the consultants, all the SSCs were used to with this legal version. Now when we are converting this to Bangla, we definitely like Bangla. So but the main problem will happen, like how you are going to read that law if you are used to with an English version. So now we have not seen any English version of this law. So if it is not there, that will technically make the life complex for all these stakeholders. And also the rule related provisions have not been introduced. So we believe if NBR is not coming with a definite rule, then many people will end up with lack of guidelines. Specifically, when you are going to deduct and deposit taxes, you'll have to deposit it within 15th of July. So if they are not going to bring the rule immediately, how they will follow the guideline? And also we have not seen any mapping or indexing of this new law. So we cannot find out earlier where the provision was and how we can relate with the new law. And technically, you will see the penalties and fines have also been increased substantially, especially with regard to filing a delayed return. Earlier, it was 2% for 12 months. So now it has been increased to 4% and up to 24 months. And if you are filing amended return and if you have got tax payable, the interest rate was 2%. Now the interest rate is 5%. So this is a substantial increase in terms of, I should say, delay interest. And in terms of other, as I have mentioned, you'll have to collect PSR. Otherwise, the tax deductions will be higher. Like if you are not deducting PSR from a consulting firm, right now you deduct 10% taxes. You'll have to deduct 15% for lack of collecting this PSR. And also, the new law has brought in a very good provision, like when you are transferring share of a local company, then before executing the transfer, you'll have to give a valuation report to the transacting authority, which means you'll have to prove that the transaction is being carried at fair value. Again, the detailed rule on fair value must be introduced, although the rule has said referred that valuation must be done by a professional valuer which is acknowledged or accredited by the central bank. And there was a I should say catch provision in terms of startup. Earlier, a holding company cannot hold shares in a startup business. If they used to hold these shares in that startup, then that cannot be considered as a startup because it cannot be a subsidiary of another holding company. So now that has been eliminated in this new law, which allows all these startups to be held from Singapore, Hong Kong, and other countries. So this provision will definitely, I should say, encourage all these startups to raise funds outside Bangladesh. So with all these few words, I know, Mamoon, I have taken longer than my allotted time, but I'm quite done. Thank you very much for your patience hearing. So I'll be connected in my car. So if there are any questions at the end of the session, please feel free to ask me. Thank you very much.
Thank you, Snehashish Barua, for your very articulated as well as well covered, I must say that, well covered issues related with the new finance bills and all the critical changes you have demonstrated with the example. I believe it helps all of us to understand. Sorry. So the main purpose was to set the title of the today's program, is that like impact of income tax on business environment. As we all know that it has the two-way relationship, that if the tax is imposed at the higher level, then it will increase the cost of doing business. On the other hand, if the government fails to get the appropriate tax from the business entities or organizations, then it will be difficult for the government to invest in the business environment, for improving the business environment, to attract a local entrepreneur, as well as the most important is then FDI. In addition, we also know that income tax and related issues is one of the top query of the foreign investors when on FDI flow. So if any foreign investor came or would like to invest or consider Bangladesh and is other attractive elements of doing business in Bangladesh, then one of their first question is that what about the implication of the income tax on our operation, as well as they want to also predict that how will it be changing in the coming days. In addition, the income tax is also an instrument, not only as a policy, like fiscal policy instrument, it was also as an instrument to ensure the socio-economic equality or resource distribution as well, balanced distribution of resources. So with this backdrop, I believe we get some insights from the presentation of the Snehashish Barua, which definitely helps us to understand to what extent in this time the tax and its different elements has been changed, and how does it is affecting in the business organizations, and to what extent business should respond. It definitely set by the strategy of the business organization. So here we are very delighted to have our today's chief guest, definitely because of the wider understanding about the business environment of Bangladesh from both the sides, from the policy making level as well as an executives. He played a very critical point. So we believe that he is the right person to with the experience of 360-degree understanding of the business environment of Bangladesh and its socio-economic dynamics. So I believe that Sir will help us to understand to what extent the income tax as a policy instrument can help the government to improve the business environment. On the other hand, how the income tax rules regulations can be considered by the business executives to design their strategy, setting their policies for achieving their vision in the very highly potential economic environment like Bangladesh. So, sir.
Thank you, Dr. Mamoon. Good evening. Assalamu alaikum, distinguished panelists and viewers from around the world. First of all, I would like to thank BDRL for inviting me here. I'm very pleased. And before that, I would also like to thank BDRL's parent organization, Dun & Bradstreet, with whom I have had a relationship for nearly 17, 18 years. And its regional head, Mr. Rajesh Mirchandani in Dubai, an extremely good friend of mine, and also Siddharth, who is the regional head for the subcontinent. So he is also a very good friend. And now we have Mamoon running BDRL, and also I was one of BDRL's first directors. I was on their board a number of times. So in that way, I feel a deep connect to BDRL. Going on to the main subject, but before that, I would take a moment to recognize certain participants here who have joined at my invitation, on also Mamoon's invitation. I can see the CEO of Midland Bank, my dear colleague, Asanuzzaman. And then I see Anantakumar Sarkar, who is the company's secretary of CCBL, whose board meeting I had attended a bit earlier, that the Central Counterparty Bangladesh Limited, which is making the clearing system, establishing the clearing system for the stock exchanges. I see one of my IUB students, Fahim Tanveer. Then I see Kamar Nahar Ruma, who is the office manager of the Bangladesh Business Group, British Business Group of Bangladesh. Then I see Usman Sajid, company secretary of Summit Alliance Port Limited. Then I see Shopon Pal, who is the group chief finance officer and company secretary of Summit Group of Industries. And the last but not least, a great star of the subcontinent, Mr. Yadavendra Mathur, who is a former principal finance secretary of the government of India. He is also the chief chairman and managing director of the Exim Bank of India. And he's my fellow director in a word that you used, Mamoon, a little while ago. You said 360-degree. So 360 TF, Trade Finance, is the organization of which Mr. Mathur and I are global advisory directors. So I'm very pleased to see them all join. Moving on to the paper, Snehashish Barua. We all know that he's an accomplished taxation accountancy professional. And every year after the budget, we wait, excuse me, we wait for his analysis. And you have seen, those of you who are here, that his presentation was very succinct, very clear, not very busy slides, very bullet sentences, very nicely arranged on the screen. So it was very easy to understand, I would say. Even somebody who finds taxation difficult to understand, he will find that a lot of clarity and a lot of understanding from this presentation. So I compliment Snehashish Barua for this presentation, which I'm sure will be further circulated amongst the business people, business houses of Bangladesh. Now, we are in a cusp of various acts just enacted or amended very recently. First of all, you have the finance bill, the budget presented. Then you have the new tax rules that have come in. Then yesterday, the Bank Company Act has been amended. And then the monetary policy was announced. 3 days ago, or 2 days ago. So altogether, you have 4 significant policy documents which the government has come out with very recently. And we in the industry have been receiving a lot of grilling, a lot of questions from the press, and have to answer a lot of questions. And you cannot answer some questions, on record is very difficult. But nevertheless, because they ask all those questions, we also have to understand, learn from other more learned people and try to give some clarity, some explanation to all and answer all those questions. So I will not go into what Snehashish Barua has shown about the macroeconomic indicators of the country. The GDP growth rate has understandably come down with COVID impact, with the commodity crisis impact. Admittedly, commodity prices are dropping now, but the effect still remains, especially of energy prices. And the inflation is now at its all-time high last month. It went up to 9.5%. So these are all worrying things for us. Now, the budget. The budget is a policy document and part of public finance. We all know the sources of finance, public finance, private finance, which includes corporate finance and personal finance. So here we are talking about public finance, the budget. So now, as in any household, the family is dependent on the principal earner's salary. So then the family has to make a budget and spend the money. Similarly, the government also needs to spend a lot of money for the country's infrastructure, for running the administration, the security, armed forces, and so on, and social service schemes. So what are the sources? In a country like Bangladesh, which is a developing country, it is very difficult to have 100% sources coming from taxation. And Bangladesh still remains one of the lowest tax countries in the world as far as the general population is concerned. The number of taxpayers, the percentage is extremely low when compared to other countries. But those people who pay tax, I will say, are quite burdened because they keep on paying more and more taxes. And as Snehashish Barua has shown, the impact of taxation in a certain scenario, he has shown that it was 31%, where the base tax is 27.5%. So there are many disallowable expenses even I face. Now I'm retired, I don't have a salary. But nevertheless, whatever little income I receive, that is also taxed heavily all the time. So those are things that the government has to do because it doesn't have other sources of finance. We see that tax will bring in 35.6% of the total revenue that the government needs, which is very less. And VAT has become now 38.1%, which we did not have VAT earlier. So VAT has become the main source of finance for the government. Now, import duties is at 12.1%, but because of the lower imports, because of the foreign exchange pressures we have been facing, the government's earnings from import duty has dropped in this current budget year. And similarly, supplementary duty also comes from imports. Now, we have seen that the investment allowances have also been dropped. But before you could have X amount, now you have to only invest X minus so much, which is very less. Actually, it's 500,000 takas in government securities, 500 taka in funds, mutual funds, and I think it's you can invest as much as you like in shares. This is what I've been told today by a tax expert. But before, I could invest quite a significant part of my income in admissible investments, which is not coming in this year. That means my tax bill will further go up this year. What I again admire is that the share scheme for employees, this is very much required. In most countries of the world, there is a share scheme for employees. Once you give shares to your employees, they have more ownership. They have more belongingness to the company. And they work harder because they think, oh, it's also my company. I have shares, so I have to work harder. So for the first time, this has been allowed, but before that, we have seen how Grameenphone during their IPO had allowed share scheme. Similarly, Robi had allowed, and recently, for the first time ever, Midland Bank share scheme came. So that pleased me extremely much. When I was in Standard Chartered Bank, I was a member of the share scheme. So that is a great benefit for employees. It can be taxed a bit, there's no harm, but at the end of it, after you've served 20, 30 years, whatever, when you go, you get a significant amount of money, which you need for retirement, because private sector people so far had no pension fund. The government employees get pension. So when I retired, I came out with a zero pension from the next month after my retirement. Happily, I congratulate the government for setting up the pension fund. And from now on, younger professionals like Samira over here, even Mahmood, you can all become a member of this pension fund. And when you retire, you will receive a lot of benefits. So in that way, I am very, very happy. The workers' profit participation fund I see has been raised to 10%, from 5% to 10%. So this the government wants to share with the profits of the companies. The government wants to share with the employees. This poses a problem for banks because when I was the chairman of the Bankers Association, we had to go to the Ministry of Labor, Ministry of Finance, various places, because they said that 5% of the bank's profit must be distributed to all the employees. Now, who are employees? So there was an ambiguity about who is an employee. So the explanation that came that except the managing director who can appoint people, everybody else is an employee. So in the banks, we did not want to give the share scheme to the employees because they're already getting great benefits. They're one of the best paid. Also, they get a lot of bonuses. So in that sense, because they are not workers, they're all officers. So who is a worker? A worker is a person who gets a very paltry amount of money in an industry, in a factory. So they are the people who should be sharing in this scheme. So not the very senior people who are already well paid. So for those workers, I have no problem in those workers receiving a higher outlay. So this remains unresolved. Now, what will happen? Now, for instance, in a bank, you say that, okay, all our officers, they're not eligible, but then the others are eligible. So who are the others? They're drivers. Who are they? Some security guards, some messengers. So that's a handful. So if you divide a huge bulk of profit participation fund and distribute it to these people, they will be getting more salaries than most of the senior people in the bank. So there remains inequities in this workers' profit participation fund. Moving on to the monetary policy, you have seen that recently the monetary policy has come up. So this is for the first time that we have received the monetary policy 12 days or 11 days ahead before the period begins, July 1st. So I'm very pleased. Usually, we used to have the monetary policy declared for July-December period in July end, and for January-June period at January end. So this has come early. You can make your own plans. I'm very pleased with that, for which I've already complimented in one of my comments in the media, the central bank governor and his team. The other thing is that it's a contractionary monetary policy. For the first time, for a long, long time, we are having a contractionary monetary policy. Private sector credit growth was 14% the last period. It's been dropped to 11%. And my another comment was that it's already 11.13 or 14%. So to achieve this target is not be difficult. But if the government borrows heavily from the banking system, the investment by the private sector will be greatly impacted. So I can go on talking on this, but I don't think there is enough time here. And then I would like, we would like to hear, questions from the audience. If they have any questions for, I'm not the tax expert here, Mr. Snehashish Barua is. I'm sure he will be able to answer those questions. And if there are any direct questions aimed at me, I'll be very pleased to try and answer them. So thank you all again for a very patient hearing, and thank you all for joining. Over to Dr. Saeed Imam.
Thank you, sir. Thank you for highlighting some critical issues, particularly the this recent initiative as a pension fund and other reforms government is taking. Hope it will improve the effectiveness of the fiscal policy to improve our overall business environment as well. So now may I request Samira to conduct the question answer session. And if anyone has the question, please raise your hand and Samira will allow you. Yeah. Over to Samira.
Thank you, sir. So we have a question from Mr. Yaduvendra Mathur. He has asked that, is the one-line filing of tax returns and refunds being updated? Online filing of tax returns and refunds, are they updated? He has asked this question. So I think Snehashish sir can answer this.
Thank you very much, Samira. And thanks to Mr. Khan as well for appreciating my efforts. And it is a pleasure actually meeting you. So responding to the question, Sameda, so right now, an individual can file tax return online. So that provision is there. NBR has developed that system to some extent. So last year, probably more than 160 or 70,000 people filed tax return online. The main challenge coming out from here is like the system is not integrated with other API. So that's why if you have got tax deductions by certain authorities, if that is not connected with NBR system, then the credit will not appear in your online tax return. So that was one of the basic limitation of that system. So far I am aware, the European Union, they are funding some projects. So hopefully, if this can be addressed, so from this year, many people can file tax return online. And regarding the refund process, the law has been, enacted on 18th of June this month, and the gadget would be published very soon. So we'll get to know the updated provision when the gadget will be available. But the most important part is the alignment with the Treasury Department updating the tax return form, because in the current tax return form, you cannot mention your bank account number in any of the columns. So they'll have to incorporate that provision, and they will have to develop the standard operating procedure or protocol with the Treasury, so that after processing the return, they can refund the money directly to the taxpayer account. So the provision is there. We are yet to see how they are going to implement this law going forward. But I should say this is a bold step by the government.
Thank you so much, Snehashish sir. So we don't have any further questions. So over to you, Dr. Mamun.
Okay, thank you. Thank you very much. And thank you, today's chief guest, Anise Khan and Snehashish Borua for your valuable sharings. And I believe that you will be always with BDRL and mentoring us, because our ultimate vision in line with our parent company to add value to the individual entity as well as an economy. And we want to become the growth partner of individual of our clients, and would like to give our continuous value-added services and maintaining the highest level of the professional norms. So, and all the participants across the world who have participated, please be with us always and share your comments and suggestions, so that we can improve our knowledge platform to organize more this kind of programs, to create the opportunity to discuss among the professionals and find the like policy advice from the eminent business and economic experts. And together we will try to build a business ecosystem in Bangladesh that will be attractive for the entrepreneur as well as for the government. And together we will all try to tap the opportunity in the coming days for the Bangladesh economy. And together we try to contribute from our level to build the sustainable business and economic growth in Bangladesh. With these few words, again, thank you very much. My sincere gratitude to all the participants, and especially the keynote speaker and our very eminent guardian, I must say that, Anise Khan sir. Thank you. Thank you, everyone. Good night. Have a good weekend. Assalamu alaikum.